Hello, and welcome to another update video about FETCH.AI. FET is fighting with this trend line here at the moment, this red trend line we talked about before. If we can break above this trend line, then there shouldn't be anything stopping FET from reaching this next overhead resistance, or let's call it Fibonacci area in the short term. But before we dive into the micro patterns, which are, I have to say, quite ambiguous and messy at the moment on the FET chart, let's take a look at the bigger picture, because this is clearer. Doesn't mean it's a great chart, however, because most of the rally is already done anyway. I mean, it's rallied, I think, round about, was it 5,000% from, double check that. Yeah, 6,000% from the low in November 22. It's not going to do that again. It can still move higher, but I consider the entire move a three-wave rally, A, B, C. The reason is the initial rally was a three-wave move into the April 2021 highs, then an A, B, C structure down in a flat correction. That C wave down looks like a five-wave move, and a lot of other coins showed overshooting B waves in, well, September, October, November 2021. So it pretty much is fully aligned with other coins. And yeah, then since the November 22 low, when Bitcoin bottomed as well, since then we've seen this rally, which was also quite substantial. And it should be a C wave, and the C wave would be a five-wave pattern, and it's a C wave that can be an ending diagonal, and that makes sense if especially if I look at the third wave, okay, which is a very clear A, B, C structure. Wave 1 can also be a small A, B, C, and the wave 5 would also be an A, B, C, but wave 5 has likely not started yet. If we talk about the bigger picture first, I mean, what are, let's say, generally larger time frame targets, okay, overall bigger picture. So we have a wave 1, we have a wave 2. The third wave would normally need to reach the 1.38 extension. In this case, that was $4.85. I've mentioned in previous videos that I am skeptical. I've become a bit, no, let's say I've been a bit cautious. Become a bit cautious because the third wave has not reached that 1.38 extension. It only reached the 1.236 at $3.41. And that's really, I mean, you see that here is the 1.236 extension. It just means that the third wave is 123.6% as long as wave 1, so just a little bit longer. The 138% extension is normally more reliable for a third wave. I've just learned over the years that if the price cannot get there in a third wave, because I consider this a diagonal, the diagonal at some point will fail and it might not hold wave 4 support. It just means caution. It doesn't mean bearish. Okay, I'm still tracking an overall bullish scenario, but it just means we have to be on the side of caution. I just wanted to mention that because that is really key. The support zone is defined between $1.07 and 52 cents. So as long as we're holding 52 cents, we should see a fifth wave to the upside materialize. And fifth wave targets we have on the chart, first of all, the 1.38 extension at $4.85. It wasn't reached in the third wave, so the fifth wave should reach it. If we talk about the bigger picture, yeah, wave A length, and we compare that with the length of the C wave, the 100% extension is $6.21. So this is a level that normally should be reached in these C waves, maybe higher. But I would say if we break above the March highs, April highs, March highs, then 485 is next level to watch. 622 is a key target. And if it goes well, maybe 870. 1925 is a stretch target, an absolute stretch that I don't see at the moment. But happy to be impressed. Looking at the very short term, this is where it's getting a bit ambiguous and also not so useful to track. I think at the moment, the microstructures, we're still caught in a correction until we get an impulse. I assume the correction is set to continue. We've reacted to the support region already down here. And the idea is what could unfold here is an A, B, C structure. We might now be working on the B wave. And it is possible the entire fourth wave is completed. The fourth wave that started in March. But bottoming structure not very clear. no 5-wave move up, so no evidence yet that the low is in, but it's possible. I've labeled it as here wave 4 complete, but it could also just be a B wave, so some kind of an A, B, C structure. So I want to say be aware that we could see some transformations of microstructures. At the moment, FET might be working on a first 5-wave move up on the micro level. Micro support is between $1.21 and $1.37. As long as it's holding, I'm looking for higher, at least one more high to reach $1.67 or $1.87 in the short term, where we could see the next pullback. So that's just the next overhead Fibonacci target zone. And we have micro support here, fighting with the trend line. I will probably take it off because it's not so reliable anymore. We had a couple of touch points, then 3 actually, but then it's sort of now stopped to respect the trend line. But the next Fib targets to the upside are clear. That's my update about FET. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.